All right, so this is going to be a review of the NQ price action from July 8th through July 12th. And what I'm going to do, how I'm going to structure this is I'm going to go over the overall structure from the 4-hour perspective. Then I'm going to go over the trades, or the trade that I said or talked about in the outlook that I was looking at that failed, and then going to go over the trade that I took afterwards, and also the reason why the trade that I was looking at failed. And yeah, let's get into it. All right. So first and foremost, like we talked about in the outlook, we had our structure. Bullish range was from this low all the way down here, all the way to this high. And if we remember correctly, how we got that was based off of the solidified points based on RCV curriculum. And so this low is considered the low of this range. It sparked all of this price action to the high side. It cleared this immediate high here. It caused the clearing of these highs here. So this is my low. Now the same thing occurred here, except in the opposite direction for the bearish solidification, which is what solidified the range. And we said that you can choose this point that would solidify this, or you can choose this point. And we said that afterwards, in review, that we would look for price action to either continue going down in the discount or have a pushback up to fill in this 4-hour inefficient pricing, which is what it did. Or we want to see price dip into discount and then start continuing higher. Right. So from here, reviewing the trade that I took, I went over and said that I was looking to take a trade off of this 4-hour inefficiency. And I looked at the 50% of this inefficient pricing. All right. And I said, okay, let me zoom in and see what happened. And I think I resolved it. No, I remember I resolved it into a 10-second sponsored candle. But what actually ended up being mitigated, right, was a 15-second sponsored candle that I neglected. And I may have glossed over it. And at the time I did the analysis, it was slightly wrong. I mean, it was right, but, it was slightly wrong because of the fact that I said I wanted to see what happens inside of this wick. And price did give a slight reaction off of that 10-second SC, but the real play was based off of this 15-second SC if you were looking for the immediate move around the 50% area of this inefficiency. And the reason for that is based on, so I had it pretty much marked up right, but I guess I neglected to see this 15-second SC in that analysis or this outlook or the outlook, right? So we got price action mitigated here, and then that created this 15-second SC here. Now, I was looking at the wick because the wick is what mitigated that candle, but also I could have looked at this and said, hey, the entire candle from here to the wick could have been my point of interest in hindsight, and that would have been a better scenario rather than just looking directly into the wick in this case, which is fine. And as you can see, price actually ended up mitigating here, 15-second here. All right, actually, why am I doing that? Go to the 15-minute time frame. All right. Yeah, you can see that price tapped perfectly into that 15-second sponsored candle right here, and then gave, I think it's almost a 200 or 150 point drop. Let's be completely certain though. All right, this gave here down to here. No, I lied. That's a 112 point drop, not 150. Yeah, so I gave a 112 point drop. That's more than enough for the day. But for me, because I'm looking for swing trades, what I ended up doing was seeing that, okay, yeah, price mitigated that, and I didn't look here to see the rejection off of this 15-minute SC that was part of this move to the upside here to fill in this inefficient pricing, which is fine. But what ended up happening, as you guys can see, is price actually ended up moving higher and not fully breaking structure to the low side off of 50% of this 4-hour inefficiency refined to this 15-second sponsor candle. Now, the reason why, start from the top. I neglected something in my system, which is I need to go time frame by time frame, or go through the levels when I'm doing this refining process. So what that means is when I start on the 4-hour time frame, the next refining process that I want to go through is not looking directly at 50% of this 50% of this inefficient pricing. Yes, that is a key area that I want to look at, but I need to see if the price action can be refined into a smaller area in between the 50% and the 100% of this inefficient pricing here, right? 50% is basically the point where I begin to look for trades, but it doesn't mean that's the point that I'm going to trade at. And I neglected that when I was looking at that trade setup from before. So next thing I do is I go down to the 1-hour time frame, and it was actually pretty clear that yes, price refines down from that 4-hour inefficient pricing to this 1-hour inefficient pricing here. And when we extrude that out here, you can see clearly price rejected off of 50% of this 1-hour inefficient pricing. But if we wanted to, just for completeness sake, we zoom into the 30-minute, and we can see that yes, price did have this inefficient pricing, but I wasn't really keen on the fact that price may go back up there, because as we start going down the time frames lower and lower, you can see that, hey, okay, we have this inefficient pricing here on the 15-minute if you wanted to get this technical. And then we also have this inefficient pricing here, right there. Okay, so yeah, we got two forms of inefficient pricing that we would look at. Now, if we go down to the 5-minute, see that this inefficient pricing actually gets refined here now, and this inefficient pricing remains, which is something that I note. Then I go down to the 1-minute time frame, scroll, and you can see that clearly there's no really inefficient pricing. It's just price run here. It's really more of a gap, but that inefficient pricing is clearly resides here between this wick and this wick here. And when we go over to where price looked at, you can see that price ended up actually tapping that, which I think from the 1-hour or 15-minute time frame was 50% of that inefficient pricing found here. Right, so if I do that, 300, yep, perfect. 50% of that 15-minute inefficiency, but clearly the open of that 1-minute. But confluent with the fact that, hey, if you wanted to go that deep in the refinement, you can find that, hey, yeah, there is inefficient pricing here, but the 15-minute to me looked fine enough. And so what I ended up actually doing once I saw this price action occurring is I actually took a trade as price was falling just from about, I think it was about 734. Yeah, actually 734 on the dot. And I had my stop loss right above the inefficient pricing here at about 753, 754. So about a 10-point stop or 40 ticks. And then I ended up letting that ride. And my target for the day, because I just wanted to end the day with a trade, a positive trade, I guess, because I failed that trade here when it went up to that 10-second POI, because I kept my limit there after I saw price retracing, and actually ended up recouping my losses. And so this trade setup actually ended up looking like this. Was it 34? And 55. So I had a 21-point stop, which is pretty large for me. But I was busy doing something else. So I was comfortable with the risk. And I took that, and that was 179.0 TP. So it's an 8% gain on account, which is fine. If I was being a little bit more accurate and I was paying more attention, probably would have been higher, probably would have used more contracts, but it is what it is. That's the trade, right? So overall, if we remember the two scenarios, now backing out to the 4-hour time frame, I said once again that I was looking for either price to continue down into the discount, right? And so I would be waiting for buys, looking for points of interest over in this area and the discounted side of the range, or I would be looking for price to fill in this 4-hour inefficiency, which it completely has. Now tap the point of interest or the sponsor or the inefficient pricing point of interest that I was looking afterwards, that I caught a trade off of to mitigate and got a play off of it. And now what I'm expecting going into the next week is for this bearish price action to continue, with the main target being this low here. And then after that, I want to see what happens as we reach down lower into the discounted side of the range. If we don't, then I will sit back and wait for more price action, to unravel. Yeah, so that's that. And I'll go over more into the outlook for next week, probably around Tuesday, maybe Monday evening, based on how the price action occurs during Monday. And I think that I'm gonna keep that schedule because it doesn't make sense to do an outlook right after a review when I'm coming out of the weekend when price action hasn't occurred yet, right? So I'm just gonna keep it that simple. If something doesn't make sense, let me know, and I'll be more than glad to clear things up. But yeah, so that's my review of the price action on NASDAQ from July 8th through July 12th, 2024. Hope you learned something, and I'll see you guys in the next one. Peace.